Welcome to TRADEREP. This is Shorthammer. It is the 28th of August 2019, and we are looking at Goldman Sachs, GS. Now, if we look at where we are today, Goldman Sachs has fallen, and we're down around the 196 area, and this is on our 4-hour chart. But let's go back a little bit. So Goldman Sachs was on this steep uptrend where it was just climbing, and you can see this is prior to earnings, and all earnings did was add a little, I guess you could call it icing on top of the cake, with that last little squeeze here, this little push up and the last little squeeze. But it had already been on a nice bull run up until that point. And where we are now, since we ran into this 222.21, and this was a brick wall, and tested multiple times, rejected, fell below the uptrend, and just have been selling since. We had a few days where we had buyers trying to step in, but primarily we're just rolling to the downside. And now we're in this little area right below this 203, 204 supply demand zone. If we scroll back, the importance of Goldman Sachs being in this area, let me show you. So we go back, and Goldman Sachs from January till April almost was inside of this channel. The top of the channel was 203 by 204, this supply demand zone, and the bottom of the channel was 187 by 189, this supply demand zone. And all it did was move around inside this channel for months. That's all it did. And it managed to break out of this channel, pulled right back into it. Every attempt out, pulled right back into it. Like Michael Corleone in The Godfather. Every time I get out, they pull me back in. 100%. So when we broke below the bottom of the channel, caught a bid, pushed back up into it, and we broke out of it here. So what I want to look for now that we're back inside this channel, this 203 by 204 to 187 by 189, is for Goldman Sachs to remain inside this channel unless it drops the bottom and breaks to the downside. And I'm looking at the TLT and the bonds, and the bonds are ripping right now. And so I do expect the financials to be down and the market to potentially be down. But as we know, one tweet or news report can change the momentum before the open. But I'm going to be keeping an eye on Goldman Sachs to see if this has now become the old normal has become the new normal, where we're going to be stuck in a channel inside this 203 to 204 area on down to this 187 by 189 area. And if we're going to bounce around within this for a few months, or if the weakness is going to be so intense that we drop below this 187 area and matriculate down a little bit more to here, this 176 area, where we spent some time. So I'm watching Goldman Sachs, and there really is almost nothing that can happen that would really help financials. I think there's almost no way there won't be an interest rate cut now, based on just economics and what's going on in the world and the pressure that's being put on the Fed. So I'll be watching Goldman Sachs for any pullbacks into the 203, 204 area, which probably won't happen. I don't know if it's strong enough to get back up to this area, but if it does, I will be looking for a short on Goldman Sachs to ride it down. And then my exit on this will be a close above the 204. So I'll probably get like 2 weeks out, 3 weeks out, and just short of expecting it to go and break this level and melt down into these 187s. So that's what I'm watching on Goldman Sachs, looking for a setup on that. I'd rather a push back up with about $5 to $7 for the entry that I want. But it's, to me, Goldman Sachs should only be going down. But we'll see on any I'll wait for a few green candles if I can get them to get closer to this area to look for a fade situation. And I'll be looking for correlation as far as the bonds and also the news before I take that trade. But that's what I'm looking for on Goldman Sachs. And no matter what the financials are that you trade, they're probably going to be going down. But keep an eye on things because news comes at us pretty fast. But definitely watching Goldman Sachs and definitely watching this channel 187 by 204 if you call the edges of it. It's hard, the supply demand zone.